The IRS just dropped their biggest tax announcement of the year, and it's going to affect every single paycheck you get in 2025. In this video, I'll break down exactly how much money you'll keep from each paycheck with these new tax brackets. You'll also discover the surprising changes to standard deductions that 90% of Americans use, and I'll give you 3 specific strategies to prepare your finances before these changes hit. Let's start with what everyone wants to know: exactly how these new brackets will hit your wallet. The IRS has announced a historic low adjustment of 2.8% for tax brackets in 2025. This change marks the smallest increase we've seen in recent years, following much larger adjustments during the pandemic. The new threshold for married couples starts at $23,850 for the 10% bracket, up from $23,200 in 2024. For single filers, the threshold begins at $11,925, representing a modest increase from the previous year. This conservative adjustment reflects the cooling inflation rates we're currently experiencing in the economy. Understanding how these brackets work is crucial for your financial planning in 2025. The progressive tax system means you'll pay different rates on different portions of your income. A married couple earning $100,000 will pay 10% on their first $23,850, then 12% on earnings, up to $96,950. This translates to approximately $45 less in taxes per monthly paycheck compared to 2024. The impact becomes more noticeable as you move into higher income brackets. Many taxpayers will need to watch out for something called bracket creep in 2025. The smaller adjustment means that regular cost of living raises might push you into a higher tax bracket. This effect could be particularly impactful for those earning near the bracket thresholds. Without proper planning, you might find yourself paying a higher percentage in taxes despite not having any real increase in purchasing power. Now let's dive into the standard deduction changes that affect 90% of taxpayers. The standard deduction is seeing a significant increase to $30,000 for married couples filing jointly in 2025. Single filers will benefit from a new standard deduction of $15,000, up from $14,600 in 2024. This change represents a 2.7% increase from the previous year's deduction amounts. The adjustment aims to help taxpayers keep more of their earned income. For many families, this increased deduction will provide meaningful tax relief. Understanding how to maximize this deduction is crucial for your tax planning strategy. A married couple earning $100,000 annually could reduce their taxable income to $70,000 through this deduction alone. The monthly impact of this change could mean an extra $65 to $70 in your paycheck. This increased standard deduction eliminates the need for many taxpayers to itemize their deductions. The simplification of tax filing is an additional benefit beyond the monetary savings. The true power of the standard deduction lies in how it combines with other tax benefits. Smart taxpayers can pair this with retirement contributions to further reduce their taxable income. The standard deduction serves as a foundation for more advanced tax planning strategies. Many families will find they can save significantly more by understanding how the deduction interacts with other tax provisions. The key is starting your planning early to maximize these benefits. Here's what most people are completely missing about these 2025 tax changes. The capital gains threshold adjustments create new opportunities for investment planning in 2025. Married couples can now earn up to $96,700 before paying any taxes on their investment gains. This represents a significant increase from the previous year's threshold. Strategic investors can use this higher limit to restructure their investment portfolios. The timing of investment sales can now be optimized for maximum tax efficiency. The gift tax exclusion increase to $19,000 opens new doors for family wealth transfer strategies. Each person can give up to this amount to any number of individuals without triggering gift tax consequences. This change allows for more flexible estate planning opportunities than ever before. Families can transfer more wealth to the next generation tax-free. The compounded effect of these increased limits can result in substantial long-term tax savings. The Earned Income Tax Credit modifications provide additional relief for working families. The maximum credit is increasing to $8,046 for families with 3 or more children. This represents a significant opportunity for qualifying households to reduce their tax burden. The credit's phase-out ranges have also been adjusted to account for inflation. Combining this credit with other tax benefits can result in substantial tax savings for eligible families. Beyond the tax bracket and deduction changes, there are several additional strategic considerations that can enhance your tax planning for 2025. Understanding how to compare your tax situation year over year across different income levels and filing statuses is crucial for maximizing your savings. Working with qualified tax professionals can provide valuable insights into quarterly planning opportunities and help you stay ahead of important changes. The complexity of the tax code means that professional guidance often pays for itself many times over through discovered deductions and optimized timing strategies. Creating a structured approach to tax planning can help you identify opportunities months before they become relevant. Staying informed about key deadlines and tax-saving opportunities based on your specific income bracket and family situation is essential for optimal tax management. Regular review of specialized topics like investment strategies, retirement planning, and small business deductions can help you identify additional savings opportunities that many taxpayers overlook. By implementing all the strategies we've covered today, you can potentially save between $1,500 to $4,000 on your 2025 taxes, depending on your income bracket. Our comprehensive approach combines a new standard deduction with optimized capital gains timing and strategic gift giving to create a powerful tax reduction plan. The key is starting your preparation now before these changes take effect to maximize your savings potential throughout the year. The extra money you save can be redirected into investments, retirement accounts, or other wealth-building opportunities that compound your tax advantages over time. This proactive approach to tax planning puts you ahead of 95% of taxpayers who wait until tax season to think about these strategies. Let me show you exactly how powerful this can be with a real-world example that most tax professionals won't tell you about. A married couple making $100,000 can strategically time their investment sales to stay within the 0% capital gains threshold while maximizing their increased standard deduction. By coordinating their retirement contributions with the new tax brackets, they could reduce their effective tax rate by up to 3 percentage points. When combined with the increased gift tax limits, this creates a triple tax advantage that most people completely miss. This strategy alone could save an additional $2,000 to $3,000 on top of the basic tax bracket savings we discussed earlier. The 2025 tax changes present both challenges and opportunities that require careful planning to navigate successfully. But taking action now with our complete tax optimization strategy could mean thousands of dollars in savings compared to reactive tax planning. The combination of new brackets, adjusted deductions, and hidden opportunities we've covered creates a unique window for maximizing your tax efficiency. Hit subscribe for weekly updates on tax strategies that actually work.